In this week's Global Economic Roundup, the People's Bank of China, PBOC, is expected to keep its loan prime rates unchanged for the fourth consecutive month, with a slight chance of no action. Analysts anticipate incremental measures to support China's growth target, and a possible 10 BP rate cut by year-end, according to Macquarie. The Riksbank is expected to reduce its policy rate by 25 bps to 1.75%, as suggested by SEB analysts, despite 64% of respondents in a SEB survey expecting a hold in September. Inflation remains elevated, but economic activity data continues to remain weak, hinting at recovery. The European Central Bank, ECB, Flash PMI is expected to show a small improvement, although the pace of expansion remains weak, suggesting a weak pace of GDP growth. With the ECB standing pat on policy earlier this month and inflation consistent with its target over the medium term, additional rate cuts appear unlikely for now. The UK services and manufacturing PMI are expected to decline slightly, with weak economic activity data expected to weigh on sentiment. Inflation is set to rise to 4% in September, which may not significantly impact BoJ easing expectations ahead of the autumn budget. The August monthly CPI indicator for Australia is expected to rise to 2.9%, driven by base effects and higher electricity costs. Westpac estimates headline CPI will lift just 0.1% on the month, pushing the annual pace higher to 3.1%. The Swiss National Bank, SNB, is expected to maintain its policy rate at 0%, with markets implying just a 5% chance of a cut into negative territory. Inflation remains slightly hotter than the SNB forecast, but Chairman Schlegel has indicated that they would only enter negative territory if absolutely necessary. Banxico is expected to cut rates by 25 bps to 7.5%, as stubborn core pressure continues to underpin inflation in Mexico. Gradual disinflation is expected to resume, with core ending 2025 near 3.9%. Tokyo CPI data will be watched ahead of the Bank of Japan's October 30th rate decision, following Governor Ueda's emphasis on monitoring data for effects from U.S. tariffs. The economy is currently withstanding the current tariff impact, according to the governor. Analysts predict core PCE could see a rise between 0.28 and 0.35% M/M in the US, as goods inflation adds between 0.3-0.4 ppts to PCE inflation, according to Fed Chair Powell's expectations. The median FOMC participant expects core PCE inflation to accelerate to around 0.27% M/M from September to December, likely due to tariffs. The Fed sees inflation returning to target in 2028.